After a historic year of record highs and regulatory reform, the month of November was one that the digital assets industry will be happy to forget. However, December has already greeted investors and the markets with even more volatility to the once high-flying crypto markets. And if that were not enough, there may be significant cracks to the literal foundation of this trillion-dollar industry, the blockchains themselves. Well, joining me to discuss this major crypto correction is NYU professor and Rubicon Digital Assets CEO and our friend Greg Johnson. Greg, thank you so much for being here with us. It's always great to see you. Can you tell me more about what has been driving all of the recent market losses in crypto, especially with Bitcoin?
Well, I'd be happy to, Faith, and it's always good to be with you too. Well, this has been an astonishing year for the crypto markets. That much is for sure. Astonishing in the sweeping regulatory reforms that we saw this year. Astonishing in terms of the record highs that took place earlier this year. And now for many, quite surprising, this market correction that you just alluded to in your opening. Look, there's a few different things that are at play here. Some of them are very explainable, and others are a little bit more on the speculative side. First and foremost, no industry has ever benefited from supporting the outcome of a presidential election like the crypto industry. And as a result, even before inauguration, ever since election night, the crypto markets had been exploding under an anticipated Trump regime that would relax the regulatory rules, that would open up investing into crypto, and all of that took place. And predictably, the markets responded with record highs, including Bitcoin exceeding 120,000 per Bitcoin, if one can believe that. So I think some of this has to do with that, end of the Trump pump, if you will, as I'm calling it. The second thing is, and a little bit more practically speaking, has more to do with the fact that Bitcoin in particular, every 4 years goes through something called the Bitcoin halving, which means it's more expensive. In fact, it's doubly expensive to mine the Bitcoin that is in such short supply. Now, that's predictable, and it often plays havoc with the price of Bitcoin as we get closer. Even though we're still a year away, people are starting to think about it. And Faith, there's new things giving people concern about crypto that are becoming more relevant. One of the subjects that I spend a lot of time in at NYU is on the subject of quantum computing, quantum sensors, quantum communications. And just to be really, really brief about it, what people are concerned about is these new technologies involving quantum mechanics, really deep science, are actually going to allow for this cryptography in crypto to be exploited. And if there were signs that you were looking for, you don't have to look very far. We even had Nobel Prize awards given to scientists working on quantum this year. So besides that, we have the overall economic outlook, which has been souring over the last few months. You shake that up into the blender, and we're dealing with this kind of market correction in crypto that you outlined.
Now, Greg, all of this recent volatility aside, can you tell us about what some industry insiders are saying is the dirty little secret that no one wants to seem to talk about?
Yeah, Faith, I'm proud of the coverage that 11 Alive has brought over the past 4 years to digital assets. And these are themes that we've been talking about for a while. Despite all the hype, despite all the excitement, crypto the technology itself, has not lived up to the promise that has been made to so many people and institutions. And one of the themes we continually have talked about 2025, which was legitimately a huge win for the crypto industry, was normalization. Well, with normalization in the minds of consumers and regulators and investors alike comes accountability and scrutiny. And what we're finding is that for all the talk about improved efficiencies and optimization, the technology has not again lived up to its promise. The cybersecurity risks that exist today in the traditional banking system not only exist in crypto, but they may be even more heightened because of that thing we talked about before, quantum, but also legacy systems right now are still outperforming on very key metrics. For example, payments. one of the most important things that you measure in an effective payment system is how many transactions per second can be generated in your payment system. The numbers are appallingly low with all of the blockchain that's supposed to replace everything. So there's a long way to go. And when you have already invested billions into a blockchain, billions into creating excitement and enthusiasm and a following, well, you're not so much inclined to admit to that accountability in the mirror that you often see. So we always hear about pride in authorship. I think there's a lot of pride in authorship in blockchain, and I think that mirror of accountability is being held up as we speak.
Well, thank you for that, Greg. We also know that you recently participated in the highly publicized U.S.-Saudi Arabia Investment Summit in Washington, D.C. Were digital assets and fintech a part of the agenda, and what are the implications for businesses here in the United States, and of course, more specifically here in Georgia, because that's where we are?
I know. Look, it was quite an honor, and I feel like it's a safe bet, Faith, that there was never an event like this held at the Kennedy Center before. And it truly was a constellation of global business executives in technology and financial services, from the likes of Jensen Huang from NVIDIA, which everybody hears about these days with AI, to Elon Musk, who was back in attendance. Every cabinet member was in this room. And it speaks to the importance of the relationship, the bilateral relationship between the United States and Saudi Arabia, which has always had ebbs and flows, but is really in a point of inflection and change. For those not following closely, the Saudi Arabian transformation that's underway is significant and one of the most important things taking place in a world that's always synonymous with conflict and concern as far as foreign policy is regarded. But more than ever, the transformation in Saudi is towards technology, financial technology. And the investments that are being made by the United States are in some part designed to ensure that that relationship between the U.S. and the Kingdom of Saudi Arabia is strong, so that the fintech or the tech portion still has the closest ties with the United States and not some of our geopolitical competitors like China, who would also like to muscle their way into the Saudi Arabian economy. There is a new digital Silk Road that is evolving that has everything to do with AI, data synergies, the abundance and cost of energy. And it matters to the folks here in Georgia. It matters to U.S. investors and U.S. citizens that we have the strongest position possible. And that's really what some of these deals and partnerships that were announced in Washington are all about. And because Georgia is one of the largest fintech hubs in the globe, with literally a majority of transactions touching Georgia in some way, shape, or form with the payments industry, then it of course matters exponentially to the Georgia business economy that we have a strong relationship with all of our allies, but especially the Kingdom of Saudi Arabia.
All right, Greg Johnson, our Atlanta-based digital assets expert and the CEO of Rubicon Digital Assets. Learned something so much from you every single time we speak. Truly appreciate you being here. Thank you so much, Greg.
You bet. Anytime, Faith. Take care.